Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today's Tuesday, January 20th. Financial stocks tumbled 16.7% Tuesday, registering their worst single-session decline since a 17% drop December 1st. Ongoing weakness in the financial sector has rekindled pessimism in the broader market. Losses in both the financial sector and the S&P 500 mounted steadily as the session progressed. The selling effort took the S&P 500 past its December lows, as roughly 97% of the companies in the index finished the session with losses. Investment services outfit State Street saw its market cap halved after it updated certain risk factors and indicated certain cash-like investments have lost value, which has the company holding some $5.5 billion in unrealized after-tax losses. The disclosures overshadowed better-than-expected fourth-quarter earnings from the company. Citigroup continues looking to narrow its operational focus as it moves away from its status as a financial supermarket. Reports indicate Citigroup is looking to divest its Japanese retail brokerage unit after recently selling part of its U.S. unit, Smith Barney, to Morgan Stanley. After the closing bell, Citigroup announced it is slashing its quarterly dividend to a penny per share from 16 cents per share. Shares of Citigroup, along with other major financial services giants J.P. Morgan Chase and Bank of America, all closed near multi-year lows. A week ago, the trio reported their latest quarterly results, which helped spur a 16.5% loss in the sector last week. European bank shares were also under stiff selling pressure Tuesday. Royal Bank of Scotland may face a record loss valued at more than $40 billion for 2008, which has the British government considering increasing its stake in the bank by converting preferred stock into common shares. Shares of RBS dropped more than 70% in U.S. trading. Barclays, meanwhile, fell more than 40% this session as investors remain concerned Britain's government will take a stake in the outfit. The fears were compounded by word of the government may be making broader efforts to restore the country's banking system, which many believe smacks of nationalization. Though financials fared the worst, all 10 of the major economic sectors succumbed to selling pressure. Even defensive-oriented sectors like utilities, consumer staples, and healthcare were hit. Healthcare giant and Dow component Johnson & Johnson finished lower as investors weighed word that the company expects 2009 earnings to range between $4.45 and $4.55 per share, after Johnson & Johnson earned $4.55 per share in 2008. The consensus estimate calls for $4.60 per share, which underscores the company's tepid outlook. Still, Johnson & Johnson reported fourth-quarter earnings of 94 cents per share, which exceeded expectations by 2 cents. I'm Pat O'Hare for Briefing.com. Thanks for listening.